Good afternoon. This is Brian Splitt with your closing commentary for Wednesday, October 25th, 2012. And we did have a day of pressure in the grains. Really started with some negative weekly export activity announced this morning at 7:30 by the USDA. Again, running well below expectations for corn exports, soybean exports below expectations, and really the only bright spot today were the weekly wheat sales. But as far as settlements today, December corn down 12.5 at 742. The D's 13 was down 4 3/4 at 634 3/4. We had November 12 beans down 6.5 at 1564. The Nov 13 was actually up a penny at 1335. And December Chicago wheat down 11 1/4, 872 3/4 settlement. And July 13 Chicago down just a half penny at 867. Just some things to note here for the December 12 corn contract. We are approaching the lower end of a range that we've been trading within for about a month. 732 does look like a very key support level. You've got the combination of the 100-day moving average at 732.5, which we haven't actually seen a close below that since June 18th, which was really at the beginning of this drought rally. We also have some weekly lows of 732.25 and 732.5. Those weekly lows also do mark a neckline on what could potentially be a head and shoulder pattern, which would ultimately project down to 688. Also, mind you, we do have a gap yet to be filled at 676 as the low end of that gap. So just be mindful of those chart points. If this market does hold the 732 area, we might go right back up to the upper end of the range towards that 765 to 75 area. As far as the soybeans go, a little bit of pressure today, but still really at the upper end of a recent range. Looks like we still have the trade feeling that we are finding legs under the market because of demand from China. And looks like 1575 is going to be some key resistance there. We had a weekly high 2 weeks ago of 1574. This week's high so far, 74 3/4. Last night's high, 74.5. So we are respecting that level. Failure there could ultimately lead us to retest $15 a bushel, whereas strength through that level should bring us back up to try and retest some of our retracement targets from the downward move from the 1789 highs. Those retracement targets potentially $16, $16.40, and $16.70. As far as wheat goes, wheat is trading very similar to corn, where we are within a sideways range. The D's Chicago contract is finding good support near 850, good resistance about $9 a bushel there. And as far as the outside markets here with the livestock first, main thing mentioned for hogs, Allendale does feel that the market has put in its seasonal top. We are recommending getting any unhedged production for the December to February time frame hedged on the board. If you have any questions as to why we feel that way, give us a call. We'll also like to look at some strategies to help you with that. As far as the cattle goes, did have some pressure in cattle today, down about $1 across the board based on some demand concerns. We also had thoughts of snow in parts of the plains also affecting things, so something to watch out for there. But we do believe that cattle is a market to continue to buy on dips. As far as the macro markets today, very quiet. Crude oil up about 35 cents late in the trading session here. That has broken a string of some recent selling in the energy markets. Dow futures down about 10 points. Again, very quiet trade in the equities today. But want to remind you that we are running low on the time that you have to register for the early bird special for our conference. Again, the dates are January 25th and 26th, and the early bird special does end at the end of the month on October 31st. So if you know you want to come, reserve your spot now. It's the best deal you're going to get. And if you need anything else, please contact us at 1-800-2-MARKET. That's 1-800-262-7538. You can also reach us online at www.allendale-inc.com. And good luck trading to you the rest of the week. Thank you.